Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders Daily video, coming to you from snowy part of the world here. It's midweek, and we have FOMC coming out today. Hopefully, you're aware of that and have taken precautions if you need to. We are looking at the FOMC from the standpoint that there's not going to be much movements happening necessarily, but that not much movement in the form of changes in interest rates, but the market can get choppy with the announcement on the horizon. Today, on the stock side of things, pre-market, the Dow, S&P are mostly lower at their pre-market times. Oil is back up again to about 90, almost 98, and gold is at 1677. Yesterday, the stock markets continued to move higher. We're getting closer to that 14,000 level. So the market is still overall bullish, kind of across the board. As we look at other news that is coming out here, we have some GDP numbers that came out worse than the forecast. So the forecast for the advanced GDP numbers was to be 1.1%. Previously, it was 3.1%. Came out at a negative 0.1%. Also, ADP non-farm employment changes was better than the forecast, so it came out at 192,000, which is higher than the 164,000 that was forecasted. So some mixed numbers there. 2:15 Eastern Time is when the Fed is going to announce its funds rate and its statement. So be prepared for that to come out then. I just wanted to show an example here of a couple things. One, the simple trading method here. And this is a pretty good example of what happens typically in the markets when the price starts to move up. This is a 15-minute chart of the Euro-US dollar. So we get a nice bullish move on the market. Most likely this was due to some of the announcements. We get a pullback, come back into the area of resistance here, or in this case, new support. Moving average is going up. So our entry here is simply going to be at the highest high of the last three. So once this bar closes, the highest high of the last three is right here. So we've got 1, 2, and 3. As we move this forward, you can see we would have entered here at 135.09. Our initial stop loss would be down below the most recent low. And we would set us a target. You know, maybe our target is 20 pips, which would put us at 29, which is going to be right up in this area. You can see that we clearly hit that. We could also close part of our position and start to adjust our stop loss up as the price begins to move higher. We could just keep it below the lowest low of the last three. We can continue to move it up below the last three. Now we're up above where we would have gotten out with our 20 pips on part of our position. Now, Now we're going to have this to where At this point, the lowest low of the last 3, we get stopped out here. So, we could take part of our position and have a nice 20 pip move, and we could have another with about 40 pips. So that's kind of the idea, is looking to get in as it begins to move above the highest high of the last 3, take advantage of those movements, adjust stops, take profits, and manage the trade the way that you should. So if you have questions about that, feel free to let me know. If not, have a great rest of the day. We'll be back tomorrow. Take a look at what the Fed did to the markets and see if there's any questions that can be answered. So until then, have a great day, and we'll talk to you soon.